Good evening everybody, welcome back to a Chart Nerd technical analysis video. Today we will be discussing the graph. The ticker is GRT against USDT on the monthly time frame. Zooming out is always a shout, guys, so I'm just going to give a breakdown. So from its all-time highs back here at $2.90 in February of 21, we created this descending level of resistance on our heads, started putting in lower highs over time, and we had this breakdown, and we had a key level of support that we was holding quite a while here back in the past, and we created this descending triangle. Now what happens was we lost this support in December of 21, and this wick eventually got filled, so we ran back into resistance on this previous support, got rejected in April of 22, and carried on correcting down to the current all-time low at 0.051. So we had a breakdown target within this pattern, and it was from the descending triangle resistance point, or the highest point of the descending triangle, back down to the support. And once it was lost, you can see that it was met and some. We did fall under this level of support for a little while and have some deviation for a couple of months back in November, December, but in January we started pushing up and getting back above. So we did deviate below the technical target of the descending triangle, but eventually got back up, and you can notice that we had this pullback from February of 23 right into September of 2023, where we had this key level of resistance above our heads and a key level of support, and we fell back to the range that we deviated out of and lost, and we came back and turned it into support. So we had the breakdown of the descending triangle, met the target, we deviated out, came back in 2 months later, pulled back for a higher low, creating a level of support on this previous resistance, and then melted up to the current local highs at around 50 cents that we put in March. And ever since, we are again pulling back for quite a steep correction. So you can see over the last sort of 6 months, the graph is down currently 71%, and overall this month has been down a total of 77%. What you'll notice is we aren't doing anything overly bearish in structure here. So we did have this descending triangle. Okay, we lost the support, confirmed it as resistance, we've broken down and started working our way back up to this previous level of support, and we've met it as resistance. So there's nothing uncommon here. The fact that we did lose this level of support in the past, the fact that we lost this level of support at around 46, 47 cents, and we did push up to around 54, but around the closes, it's not uncommon to see a correction down, and then when you do start building your base back up and breaking out, you run into these patterns and meet them as resistance and start pulling back, looking for a higher low before a next breakout. So I think this is still bullish structure. We do have a very key level of ascending support right now that we need to keep our eyes on here. So I'm going to zoom into the weekly in a second and have a look. But from this low, you'll notice that we've had a wick down to this key level of ascending support. So we've got a very key level of support here. We've had this 1 point of contact here that started in January of 23. We had a couple of points here in October of 23. And right now it looks we're going to be putting in a couple around August, September, October as well. So it's kind of ironic that last year we was doing the same. So from February, we pulled back all the way until September, October in some sort of falling channel. We held a key level of support and then broke out, and we took out this local high that we put in February as well. So we broke out of that, and now we've come up to another resistance zone. As I've mentioned, the resistance of this descending triangle that we broke down from before, we've rallied back into that resistance, and now we're pulling back to this key level of support once more. And it looks like over the next couple of months here, we could be looking to form a base on this ascending support range, looking for the next breakout, and it's still bullish structure. It's still bullish structure. I say this on a lot of coins. They're coming back to their key levels of support right now. It's not to say that we can't see pullbacks here. Keep this in mind, because we can fill this wick in. Wicks do generally tend to get filled, whether it be this month, the month after, wherever it may be. So we could still see a pullback over the next couple of months of around 21 to 23% back down to this ascending support. But nonetheless, I think it will just provide opportunity, because we have got this low that we've put in, the all-time low in January. Oh no, where did we put the all-time low in? It was November of 22. We've got this high after this low. We've come back to a higher low. We've got a higher high. Right now, if we can build a foundational support, we're just building really bullish structure here and just coming back, correcting, looking for a key level of support before going again for the breakout. So it will all be about holding this key level of ascending support over the next coming months, and then taking out this 50-cent high, I think it was. Yeah, around 50 cents, taking this high out, and it would validate over the next coming months that we are in this sort of macro uptrend and looking to retrace back towards our current all-time highs. So there's a lot to see and look at on the monthly time frame, and the larger the time frame, the more confluence to the signal. And the fact that we have come back down to this key level of ascending support, and we did very similar last year, and it wasn't until September we started flipping a switch and breaking out of this resistance. Right now we've come back and we're very close to September. So could we be looking to do the same again and tackle out of this resistance somewhere down the line? I'm sorry, it's very messy. But there's a lot to tell on these time frames, a lot to tell. If we look at the weekly time frame, there is something slightly negative that I was looking at here, and a lot of alts are doing something very similar. So we've got the 20 and 55 EMA on. The 20 is this yellow EMA here, and the 55 is the red. Now, what happens is, I've also mentioned in previous videos, when you start losing these EMAs, you're in a downtrend and you're hitting your heads on them, and you're failing to break above them, and you're underneath them, you're in a downtrend. And until you start building some sort of bottom and getting back above these EMAs, this is when it can confirm you're in some sort of uptrend. So right here, we had the all-time low, we came up, got above the 20 EMA, but ran into the weekly 55. Now from the weekly 55, we pull back in a descending channel to a higher low from this local low down here, in our all-time low, sorry, and then broke out and took out our local high. Within doing so, we got back above the EMAs and created a bull cross. This bull cross was right on support here, and this is what led up to this 50-cent move that we're pulling back from right now. When you start building foundations and these higher lows, this is where it's bullish structure. You've got an impulsive move, a corrective move, a further impulsive move, and right now I do believe we are in this corrective move, looking for a higher level of support before breaking out and continuing. But as mentioned, just as you get a bullish cross, which is a bullish sign and a breakout signal, when you get a death cross, so when the yellow goes below the red and we do the opposite, what we could see is a pullback here, a run into these EMAs, and we have to come back for a high level of support before breaking out and build some sort of base. Very similar to what we did here, just a bit more tighter. So we had this low, and then we built a higher low after pumping up and then broke out. Right now we've got this low, build up some sort of higher low, building up some sort of pump before a breakout. So we need to see some sort of double bottom formation form over the next couple of weeks. I do think we could potentially see relief up into this EMA rejection over the coming weeks as well, but there's key resistance above at around 17 cents that we would need to get back above to invalidate any further rejection to the downside. But we need to watch out, I think, for the key thing here is this ascending level of support. It's this weekly ascending level of support. As long as we can build base and foundation on this level, here we did some sort of double bottom. We eventually broke out and then didn't look back until the 55 EMA. We then came back in a 1, 2, 3, 4, 5 wave correction, back down to this ascending trend line. Again, built up some double bottom and then went for the break. Pull back to a bull cross on the EMAs. Further continuation. At this point, we ran into the key resistance of the previous high over here around 50 cents that was put in back in March, met this resistance, and right now we're just in a 5-wave pullback looking to come back to ascending support. So all we need to see over the next couple of months or weeks is some sort of double bottom foundation here, just like we did the previous 2 times. We had a double bottom on this ascending support. The first time we had a double bottom on this ascending support. Third time, could we get a double bottom on ascending support, and then coming into September and October, look to go for the breakout and get back above this death cross that we could potentially be about to be occurring. Could potentially be about to occur, if I'm saying that right. But that's it from me, guys. I do believe we are in this corrective move. We haven't lost bullish structure. We've got a key level of resistance on our head. We've got this key level of support, and right now it's all about holding this ascending level, building up some sort of double bottom foundation over the next couple of weeks, breaking this resistance and rejecting this EMA, because if we do get the cross, we would have to break out quite quickly to negate any further downside. Okay, guys, so yeah, do look for this key level of ascending support. If it comes over the coming weeks, look for a foundation and maybe wait for trading on confirmation, whether a break of resistance or whether we lose the support. And that's it from me, guys. I hope you enjoyed the content from Chart Nerd TA. Take care. Peace out.